Hey, hi there. Welcome back. Hello. Good to see you. Good to be back. Ed Ponsi here, your FX educator here on behalf of FX Street once again. Welcome back. Good to see you. Hello. And welcome. What a day. It's Monday. It is September the 18th. Yes, Monday, September the 18th. Good to see you. And welcome home. Well, welcome back. Taking a look and feel free to ask any questions. I see, if you do have any questions, be it technical, fundamental, risk management, whatever the case may be, I'm always happy to take your questions, whatever they might be. So feel free to ask away. What have we got today? We're taking a look here at the chart of the dollar index, right? And the trend continues, the downward trend continues on, unabated. There's been a lot of times when I thought, and many others thought, that the trend was going to turn, and that just was not the case. And this is what happens very often. You try to call the bottom, or you think that the trend is ending, and it's just not. And if we look back to the left here, there were many support levels where, like for example, right here, that was a support level broken. Then you look at this one right here, broken. And you look at this one right here, broken. And they all broke. All those support levels have broken. And so it's tough to say. I mean, at this point, the dollar trend just continues unabated. And that means sell dollars. This is one of those situations where the price gets momentum and just continues. And, the fundamentals do go with this. Now, you have to look at what happened before that trend. Before that trend, there was a lot of dollar strength and a lot of talk from the Fed about raising interest rates that never happened until much later. And now you have the opposite. Now you have the dollar falling. But really, if you look at it, we're right back where we were in late 2014. We're right back where we were 3 years ago, and we're right back where we were a year and a half ago, and with a lot of ups and downs, but we really haven't traveled all that far. And if it's not that we're not in that odd of a space for the dollar, even though we've trended quite a bit. Prior to this downtrend, we had a very sharp uptrend, and here we were in a very odd space for the dollar. Up here, we were at our highest point since, I believe, 2003. We were at a 14-year high. Now we're only at maybe about a 2-year low. So it's not that odd of a space for the dollar to be in. And people say, well, it's good to have a weak currency. Yeah, but the dollar, the U.S. economy, every economy is different. Every economy is different. The U.S. is not really dependent on exports the way some economies are. Japan, much more dependent upon exports. China, much more dependent upon exports than the U.S. Germany, much more dependent upon exports than the U.S. So it's not as important to the United States. And you say, well, what about countries like Australia and Canada? Well, those countries export things that are not going to be affected by the price of their currency. Think about it, right? If the Canadian dollar getting weaker or stronger doesn't really change the price of copper or oil. Fair enough? So, in other words, having a weaker currency is really only going to benefit countries that are exporting things that they manufacture, not stuff that they dig out of the ground. Because stuff that you dig out of the ground, like copper and iron ore and oil, That's not good. That's really going to be more of a global price, more of a global. That's affected more of a global by more of a global price. Whereas it's the stuff that you make in a factory that is really going to be affected by the price of your currency. So think China, think Germany, think Japan when you think countries that are affected by their weakness in their own currency or strength in their own currency. Fair enough? Okay, let's move on from that. So if the dollar is weak, then you're thinking the euro is strong automatically. And you would be correct. And even though that trend line is broken, the strength is not over. It's just a temporary lull. But a lot of resistance up here, just above 120 area. Okay. So, but it's not necessarily mean the trend is over. It just means, you know, a little bump in the road, but the road continues, right? And what a road it's been. So the euro has, just like the dollar broke all support, the euro broke all resistance here and here. And the euro pulled back, right? This was a big resistance point. So when resistance breaks, it becomes support. And you can see that happening right there. Euro becomes support right there. Fair enough. And away we go. Off to 120 again, in my opinion. That pullback is probably a buying opportunity. You know, people get excited because of that hammer. Is it a hammer right here? Yeah, it's a hammer. That is true. It's a hammer after a pullback in an uptrend. It's not a particularly impressive hammer. If you look at that, the wick is not that long, but it's the right type of pattern in the right type of trend, right? So this is going higher, almost certainly. Carlos says, I think Dixie, meaning the dollar index, is going to go to 88.50 to 89. Well, if true, then this is going higher. And I think this is going higher. So it looks like Carlos and I are in agreement, which is not that unusual. Carlos sees this going lower. And I know Carlos looks at the longer term charts, so that's where we're going to go first. Carlos is looking at this line, looking at this area right here. Now, one of the things I'm looking at, if all support is breaking, let's look at high-low. Okay. And if I measure high to low on Fibonacci, notice I took out all the really interesting numbers and I just left in the basics. I think it's going to work better if you stick to basics with Fibonacci. I took out all the oddball stuff. Right now you're at a 50% 50%. It's not 50. I almost said 50% Fibonacci retracement. 50% is not a Fibonacci number. And right now we've retraced 50% of this move from mid-2014 until now. Well, from mid-2014 until the beginning of 2017, let's say. From mid-2014 until the post-US election rally, which saw the dollar index way up above 102, almost to 103. Half of that has now been given back. I'm looking at this And I'm thinking Carlos could be right. 61.8% of that retracement would put it right about where? Right about 88.50. Well, right about 88.56. All right. Carlos is looking for 88.50. 88.50 to 89. That 61.80 is right about there. I show 88.60, so it's right, pretty much very, very close to Carlos is looking at. So I think Carlos could be onto something there. 50% is not a Fibonacci number, by the way, just in case there's any confusion. But 61.8 is, and 38.2 certainly is, because it's the inverse of 61.8. You take 100 minus 61.8, you get 38.2. But 50% doesn't really belong in there, actually. Interesting, right? Okay. Yeah. Carlos has had some pretty good success. Anyway, he's made some really good calls in the room here. Anyway, I'm just going to say, I don't even know. I'm looking at this area here on Euro. Right. And if you push this up a little bit, there's a little bit of congestion right here. Around 122.80, 122.85 is the next big area of congestion for Euro. So that looks to me like a spot where Euro could run to. So certainly the dollar could go lower and the Euro could go higher. And why fight it, right? Why fight against it? This is where we seem to be heading. Now, everybody's going to be very focused this week on the Fed and Janet Yellen, and this will probably have a lot to do with what happens next, or maybe not. Maybe not. I mean, sometimes people pay too much attention to this stuff. But I will tell you this. I wonder, Yellen has already raised rates a couple of times, and I don't know how much room the Fed has to continue to raise rates. So we're going to get the Fed meeting, I believe, starts on Tuesday. And then we get the decision on Wednesday. They're expected to stay at 1.25%. Actually, it's a range between 1% and 1.25%. But it's the press conference and the projections that's what's going to drive the market wild. I don't know. We might get one more rate hike this year, but I don't know if we really have. If Congress could pass some kind of tax reform, then I think you could see it. I just don't know if I believe that Congress can get it done. If Congress can get tax reform done, then I think you have a reason to raise interest rates, because it'll spur growth. But I just don't believe in Congress that much as far as getting anything done. What's the outlook for crude oil? Let's take a look. We touched 50 today. And you can see we're above 50 right now. First time in a while. We've been above 50, we creep up. And it's unusual to me because, well, the catalyst that finally got us above 50 was the storms, the hurricanes. But these hurricanes, the really dangerous ones have passed, and the hurricane season is coming to an end. We have a couple hurricanes spinning around out there, heading toward the U.S., but they're kind of fizzling out, I think. And I don't really see it amounting to anything. So I think, fundamentally speaking, we should be going back down, right? Without the hurricanes as a threat. But technically, we seem to have different ideas. The chart seems to have different ideas here. This seems like it wants to go a little bit higher now. It's funny how the fundamentals and the technicals do not always match up. And I think this is where, you get these people with their fundamentals, and they love to poke fun at technicals, but I don't know if they make any money. It seems to have the look of an ascending triangle here. I'd say we could fall back to 47 for sure, like based on this. But if it or it could go higher. I mean, if it longer term, this has been flat. So big picture, right? This has been one of the most boring markets out there. So this is for your context, right? If we go back to, really, it's been over a year, we've been stuck between 42 and 54. And we're kind of in the middle here. But within this context, we're heading higher, gently higher. But it seems odd to me, like very strange timing, because the hurricane seasons are coming to an end. Some of these places that shut down in the U.S. are now going to reopen. And some of the things that pushed this up are starting to, the forces that pushed this up are now going away. So fundamentally, it doesn't seem to hold water, but technically, this looks like it could break out and go higher. Not above 54, and not really below 42. I don't see it breaking out of this. Something really big would have to happen to cause us to get out of this sideways movement. I don't think it could get above 54, but it could get above 50. And I don't think it could get below 42. But 47 is the short-term support. That could break. 42 would be a lot harder to break. 54 would be harder to break. 50 could break on the upside. But right now, to me, the technicals and the fun at 44 is their support. There is I'd say minor support. Yeah. You see this little cluster here? I'll put a circle around it. There's definitely support at 44, but I just wouldn't consider it major. You see how there was a reversal here? Those three candles all bottomed out near 44. That was in July. So yeah, there is some support at 44. Yes. There's also at 46. Right here. See this? But I'm looking at this line coming up, and right now I'm thinking I'm projecting this at 47, right? So there's definitely support, and this could just simply break out above 50. Or it could pull back to 47. That's how I'm seeing it right now. It looks mildly. I'd describe it as mildly bullish within a sideways pattern, and at the mercy of geopolitical events and at the mercy of weather events. So right now we have another hurricane spinning off the coast of Florida, but it's not going to hit Florida. It's just going to come up the East Coast. It's not going to hit land, and it's not going to create any problems. In fact, I might be heading to the beach later this week. I might be speaking to you from the beach later this week. I'll let you know if it's windy down there. But it doesn't seem like it's going to be a problem. Okay. Not anticipating any problems down there. Okay. All right. The 2017 10 EMA supremacy continues with the sterling pairs. This has been our little trade for this summer. Was the 10 moving average, and we hit it for 6 on a couple of trades with the 10 EMA to give a cricket term, or knocked it out of the ballpark, to use a baseball term. We had a couple of big winners using the 10-day moving average, and I'll fire that up. But it's been an unbelievable year for this, and it just goes to show you this is a strategy that comes and goes, right? You can't always depend on it. It's not something that works all the time, but when it works, it seems to work really well. And it seems to work really well at times when the dollar is trending, or it's a trending strategy. Let's put it that way. Look at the move on pound yen. Now, I wouldn't say that it's working on pound yen, but pound yen has moved about 900 pips in the last 6 sessions. That is just on a roll here. Pound dollar is all the way up to 130, got all the way up to 136. And it appears that we're getting some bounces off of that 10-day moving average now. Here's 1, 2, 3, 4. And look at it, just the slingshot off of that last one. We could have bought that below 132 and shot it right up to 136. Holy cow. In just a couple of days. Unbelievable. Yeah, the pound, it's amazing. This, I believe this is tied to a couple things. For one thing, there's weakness in the dollar, which is having an impact here, right? And this is part of it. But the pound is also running roughshod over the euro. And this has something to do with the negotiation between Great Britain and the European Union, I believe. And it also has to do with expectations of interest rate hikes. Excuse me. The expectation for a rate hike has gone up in the UK. So in other words, we have a meeting this week of the Fed, our central bank in the US. Well, Great Britain had a meeting of their central bank last week. And I'll see if we can find the spot, right, where their central bank had their meeting last week. I think this was it right here, where they just lit it up. Yeah, I think this was it right here, where it just took off. It's becoming apparent that they're going to raise rates. It's becoming very clear that Great Britain is going to raise rates. Have a good day at school. They're going to raise rates in the UK, even though the vote was still. There's 2 hawks on the 9-member committee, so you've got 2 people voting in favor of raising rates and 7 saying not yet, not yet. But it's becoming pretty clear that it's going to happen. And there's more going on as well than this. The negotiations have gotten a bit nasty between Great Britain and the EU, and the market seems to have applauded this for some reason. And I'm not 100% clear exactly what happened. You know, being in the US and being a bit detached from it. But it seems that they've decided to take a week off from the negotiations because it became a bit heated. But I can tell you this, that at one point, you know, the EU is trying to present Great Britain with a rather large bill. And Britain is basically saying, well, we might not pay you anything. And this might be where the negotiation ends. And the market seemed to like that from the pound's perspective. The market seemed to applaud this, and but the negotiation became a bit uncivil, I think, and I think both sides said, let's take a week off. Let's take a week or 10 days, I forget. Let's have a cooling off period here. But it sure seemed as if the market approved of that little tactic there. The pound is running roughshod over everything. It is suddenly the strongest of them all. There's pound New Zealand bouncing off of that 10-day and just running roughshod over every currency out there. So we'll talk more about that during the next session. This one is coming to a close, but wow is all I can say, right? The pound is absolutely on fire right now, and the circumstances surrounding it are strange to say the least. But I will say this: nobody knows how this is going to end, and none of us have ever been here before. We're in a very weird place with this negotiation. No country has ever left the European Union before. So nobody knows what's going to happen or how it ends or what comes next. But the market seems to have taken a shine to the pound recently, and shorts have absolutely run for the hills. Okay, on that note, let's wrap this session up. But I'll be back in less than 30 minutes for our next session, so be sure to tune in. We've got a lot of other charts to look at, questions to answer, And so I'll be back with you at the top of the hour. I'll speak to you then.